Three immediate takeaways from these Fed minutes. Number one, there was no agreement on when the Fed will begin trimming its balance sheet. Number two, a very rigorous debate showing again quite a divided committee over the question of where inflation is headed. And number three, there was an explicit mention of high equity valuations, underscoring the message that some senior Fed officials gave last week. So let's go back to that first point. No agreement, as I said, on when the balance sheet trimming will begin. If you'll recall, after the June 14th meeting concluded, the Fed released a plan, a rough plan of how it will intend to reduce that balance sheet, beginning with reducing the size by about $10 billion a month, ramping that up gradually to $50 billion a month in quarterly increments. But they didn't say when that would start, and that's because they could not agree. Several of the committee members favored starting in a couple of months, according to the minutes, but others preferred to defer that. And it wasn't clear exactly whether that's a hawkish or a dovish signal, quite frankly. It could be argued that some of the doves preferred to give more time before taking any action related to the balance sheet or interest rates, and at the same time there was a sign that some of the more hawkish members of the committee might prefer instead to move ahead with another interest rate increase before the balance sheet is taken on next. On the question of inflation, the official message from the committee is still viewing inflation, or the recent dip in inflation, I should say, as something that's transitory. But at the same time, there were several members of the committee, and I'll quote here, several participants expressed concern that progress toward the committee's 2% longer-run inflation objective might have slowed, and that the recent softness in inflation might persist. And on to the third point that I had mentioned in relation to the equity valuations. There was one interesting quote, and I mentioned that there were some senior Fed officials last week, including Janet Yellen, who talked about high equity valuations. In these minutes, it read, equity prices were high when judged against standard valuation measures. So not exactly an alarm bell, but another nod to that idea.